Ladies and gentlemen, welcome to this webinar of Global Fleet, the Executive Network. We are going to organize a webinar on seeking fleet management efficiency in China. My name is Steven Schroefs and I am Chief Editor of Global Fleet. Why have we chosen this topic, fleet management efficiency in China? Well, first of all, China is not the most, let's say, easy country to organize fleet management in. In fact, China can be seen as a region on its own. Next to that, we see that in terms of fleet management maturity, there are still some things to develop and to do in China. And so it's not always as easy to integrate China in an international fleet management approach because of the specifics of the Chinese fleet management market. Thirdly, China has more than 23 provinces, and so everyone has his own legislation and taxation scheme, his own rules, etc. So it's not so easy for an international fleet manager to develop a consistent fleet management approach for the complete whole country. And finally, of course, as an international fleet manager and a global fleet expert, you want to see how it's possible to include China in your global fleet management strategy. But due to the fact that China is so specific, there might be some challenges. So therefore, we think it's interesting to see what you can do in terms of optimizing your fleet management in China. And we have the pleasure that it's not only me that has to speak today, but we invited two expert speakers. First, Knut Krösche, Director International Fleet After Sales and Used Car for Volkswagen Financial Services, will give insight in the Chinese fleet market and the way that Volkswagen Financial Services is organized to help international fleet customers. Afterwards, because we know that sharing best practices is really interesting and important, we have the pleasure to introduce to you Chris Tinajero, Global Category Manager of Ericsson. He will share what he has done already in terms of fleet management efficiency in China and how he sees the next steps. So, for your information, at the end of this webinar, we will have a lively Q&A session. So as a participant, you can send your questions to the expert speakers by using the VNA box on your screen. So there is a little button mentioning VNA, and you can easily send your questions for one of the expert speakers, and at the end of the webinar we will have a Q&A session. Let me now introduce to you our first expert speaker. It's Mr. Knut Krösche from Volkswagen Financial Services. Knut, the webinar floor is yours.
Okay, good morning everybody. Now we talk a little bit about China, about our experiences. And here's the agenda of what I want to talk about China today. So, first I give you an overview about general market information, and just say that up front, it's very difficult to get really reliable, concrete information about this huge market. It's not so easy to get transparency in, and that counts also for fleet information. Probably you have experienced that also as a fleet manager. Then we've talked about the vehicle market. I go into the leasing market, and after that I would a little bit talk about our concrete numbers and experience in China, and then the specifics and the outlook of this huge car market. So first, if you see this, Beijing in the year 2000 and Beijing in the year 2016, it's so fast and accelerating that China is a market. They just step over some development that we usually go. When we started with the internet, for example, we had LAN connections really with wire. They just overstepped this, and all of a sudden they had wireless LAN, they had already everything in remote. So China is so fast that people say within 5 years, usually you cannot recognize a Chinese city. So if you have been there not for 5 years, It's completely different. New streets, new buildings. It's hardly to recognize anything. And another thing, for example, is when it comes to leasing and the usual mobility schemes like car sharing, we think that car sharing is already kind of old-fashioned again in China. They are already in the way of taxi hailing. The Ubers and the Gets of this world has already pushed away the car sharing approach. So it's really fast, and it's really its own development in China. So when we started with the leasing issue, it started already with the problem that leasing was not in the language in China, in Mandarin. They had no sign for leasing. They're using the word or the sign for renting, so it starts with that. Then it's a completely new concept. We still have to explain this to our customers and to the authority what is leasing about. And then there's also not 100% clear the difference between finance lease and operating lease, but I come to it later. There is no single nationwide regulation. You can think that this country is ruled very centrally when you think about the party, the Communism Party, but it is not. Each and every town and province has its own regulation, and that makes it very difficult to handle this. And the second thing is, if the Chinese people think or talk about new laws, that is not as we probably know that from Europe, that they talk in the parliament weeks and months. It can happen to you that a law comes into place within 24 hours, and then you have to react. It's very fast, so you always have to monitor the authorities and the market. Things can happen very quick, and that doesn't make life easier, actually. The market itself is still a cash buyer market. Although if the trend is going down, it's still a high portion of people who buy the cars, and it's still a new car market, even if there's already for 10 years this trend. It starts now with the used car market, but the used car market is very difficult. The people are not used to it, to this market, and actually they don't trust each other. And that's a very difficult thing, but of course the car's coming back now, and we start with the used car market, and all of a sudden that is also very quick, very high volume then. So the financing is going up a little bit, the trend. It's mainly private, and the leasing is mainly for corporate, also for private, but mainly for corporate customers. The vehicle market. So this is some numbers we get. They're I think about 2 years old, but it's the best we still can get. Actually, you see there's the big acceleration and still a growing trend, although we must see that the growth has slowed down a little bit. They also facing the first economical, I would not say problems, but slow down in economically growth. So the concrete number for 2015 have been 19.3 million car market, and in 2016 we estimate that we have about 21 million passenger car market. So assuming that the light commercial vehicle stays the same, that means in 2015 we have around 23.3 million and 25 million in 2016. And it's really difficult, so if you see sometimes reports with slightly different numbers, that is quite normal, because there's no one who has really the 100% numbers. You only can count your own cars, but the rest of the market is difficult to find. Anyhow, we see this is still the biggest market in the world, and it is growing. Here we have some sales channels, and what is interesting, after they had the slightly scandal with the corruptions and the big cars in the authorities and governments, you could see that the sales went down in government. But the interesting thing is the driving schools is still growing very fast, and that is a sign that the people still, the number of people that making a license is growing. So there's more and more drivers to come, and that is interesting here. And what I just told you about the legislation that is very quick, also social tendencies are also very quick. If there's a ban on big cars, luxury cars, because the party tells you this is not en vogue anymore, or is then by law forbidden, it's really very, very fast that sales channels changes. So the reactivity and the volatility is very fast. The good thing here is that there are more people about to come to drive a car. And a slightly increase in leasing, but you see how small the number is compared to the huge market. The leasing market. Here you see some differences in some items regarding operating lease and financial lease. Generally, operating lease is for corporate customer because they want to have this full service leasing approach with all the services around. The vehicles are registered on the leasing company, and the remarketing is done also by the leasing company. The financial lease is seen by the private people as an alternative for an auto loan and also for corporate customers. The vehicle registration is on customer's name. That helps you in respect of car plates, because car plates is the big bottleneck in that market, and the customer takes over the car at the end of the lease term. Target customers, just discussed, is large enterprises, and for financially small and medium-sized companies, because you can use the dealer sales channel, they have access to the market. Because of this huge geographical market is as big as Europe, it's hard to cover all within field force or key account management. So it's a way to go through the financial lease, which can be sold by the dealership. And the big advantage for that is that financial lease luckily has a nationwide regulation. So this is not something you have to negotiate with all the provinces and cities. You can do that nationwide, and you can do that via DealerNet. That is the big difference. And then, of course, the customer benefit is that we have in the operating leases off balance, and in financial lease you don't get a credit record in the public authorities, bank authorities. The sales channel usually through the operating lease, or the operating lease is through key accounter, and as I said, financial lease you can use the dealerships. The Chinese leasing market, it's very fragmented. It's still a cash payment market, but we see that the popularity of vehicle financing is increasingly. That's good for us. That is our business, especially for international companies. The leasing market is still very, very small. It's something about 350, 500 to 700,000 vehicles, but we think that there will be a growth rate in the next years. Operating lease is still the most common product, and the customer really expects a full service leasing like this from Europe, with all the maintenance and services around, and actually often also including a driver, which is difficult, but because you're not allowed to solve, if you want, eat a driver, but the people expect it, especially if you have many expats from European countries, it's better for them probably not to drive themselves. So you have to take care that you manage to have a driver, that the driver is on time at the right place in the morning, and that the driver is able to speak English. So it's not that easy to have a reliable driver. If you see the competition, we have the global car rental leasing, like the big ones, Avis, Hertz, ALD, Aval. Avis actually is already for a long time there. Then you have the big Chinese rental firms, China Auto and Anji, and you have many, many, many small Chinese companies from 10 to 100 cars in a very low cost structure environment. Here you see the rental companies and the rental market. It's more or less 10% of the long-term rental market in China, 2013. This is the size. We have the numbers from 2013. You see here that there's only the top 10. The biggest one has about 12, probably today about 14,000 cars, and we with close to 3,000 cars are already number 5. But you see how small that business is compared to the European leasing market or to other regions in the world. That this is really substantial. We have customers, they have 6,000 employees but only 300 cars. Usually they would have probably 5 as much as that. If you see now the market, how it's divided into private and commercial and leasing and cash, you see the numbers from 2010 and 2018, that the non-private area is really very small. It's just 10% of the whole car market. And within the non-private, you see the institution and authorities and the corporates. That's 50 to 0.5 to 0.7. And we see the growth, and we would estimate that the numbers really increase regarding leasing. But nevertheless, if you see on the total market, we think that leasing share probably will not be more than 5% of total market. So it's still very small, and the company car is not that mobility mean. It's still that the field forces go by train, go by bus, go by taxi, or by bicycle to their customers. So it's not the typical field force fleet that you can find in China, because either it's so high traffic in the towns or it's so long distance that's better to take another transportation. Here you see the leasing market, how it is divided into the players. The most are still in long-term company car rental or short-term. It's more for private customer. The B2B short-term rental services is rare, as I said, rather rare, because they take other transportations. Here you see the MNCs, that's the so-called multinational companies, like Avis, ALD, and ourselves. Then you have the SOE, the state-owned entity, that is state-owned rental companies, and then you have the private one. And then you see that the private one the big ones are in the short-term B2C area, and of course the bigger ones are in the B2B, rather long-term area. But the difficulty is that there are so many players that's hard to get into that competition. We are somewhere placed between ALD and Avis in that area here. That is our aim here. So Volkswagen Financial Services in China, as I said, volume-wise we're rather small if you compare it with Europe. If you compare with China, we have already after 5 years quite a good position. We're under the top 10, but nevertheless it's very small volume. On the other hand, our philosophy is we have to be where our brands are. So if they're going somewhere in the world, and we have quite substantial market share in China, so we have to be there as Volkswagen Financial Services. And if you see that now coverage-wise, with about 19 locations, we are one of the biggest full-service leasing provider because of the coverage. So really in the important cities we are present. And I mean, if we talk about car sharing in mega cities in Europe, to be honest, there are very few mega cities. Yeah, for example, Germany. Many people try to do this car sharing business. Actually, we have no mega city in Germany. Yeah? We have big cities like Paris or London, but Germany is not that big. And if you talk about China, you have really more than 50 cities where they have millions of inhabitants. For example, Chongqing, this in the mid-Rice Delta, I think no one knows this name besides the people who have been there. That's the biggest town in the world. It's actually bigger than Tokyo. It's something around 30 million people. So they're even bigger than Shanghai and Beijing. That is really astonishing how big the cities are and how small the fleet business is there. So market specifics. 90% of the leasing business is in the big 10 cities, the so-called tier 1, tier 2 cities. The problem with these cities is because of the traffic, you have already restrictions. I think in Beijing you can register another 300,000 more cars and then it's over. Then it's not allowed to register any more car as long as it's a combustion engine. If we talk about electric vehicle, then you can do so, but the Chinese authority said, for example, they will start with car sharing. First we said we can do so. Then they start, but we do only car sharing with electric vehicles. And we said we can do so. And then they said we only start car sharing with homemade, so to say, Chinese-produced electric vehicle. So you see, there's always the authority really big into that car market. We have all the joint ventures. We can do business there. But all of a sudden, it can happen that the Chinese authorities they decide how the market is running. So then the problem with the leasing companies, you have the same restriction as business or private clients. You can only grow if you either buy a small rental company and buy their fleet and buy their plates, or you take part in auctions. Auctions, they do some 10, 20 plates, but if you get these plates, you have to register a car onto these plates within 14 days. That means, of course, in order to get the plates, you register cars which are probably or usually not the right ones for the customer. But take it or leave it, get the plates with the cars that probably the customer doesn't want, or you don't have the plates. So, and we have prices now in the big cities up to 20,000 euros for a car plate. And this is something that you cannot amortize over 3 or 4 years in a leasing contract, so the cost stays with you. On the other hand, it's kind of good. You can activate it, you can trade it, but it's really crazy these days how the prices went up. So and that's really difficult in that market. So the outlook, we see there further potential for operating leasing, especially for business clients because they want to have the services around. Financially, for small business and individual clients, because it is not that regulated in the cities, we hope that it stays the same. That could be a good channel for us to grow there. And we see that the used car leasing probably gain importance as the used car market develops. Challenges, complex regulation frameworks, really many different laws in different provinces, high costs, which we cannot pass through to the customer, and the volatility and the legal uncertainty is still very high in that market. So all in all, we think companies, which are able to find ways to minimize cost, do accurate transaction of business, and really have the possibility to offer all services to the customers that are demanded in the future will be competitive, and you really have to ask yourself if you're able to do this. If not, it can be an expensive adventure in China. Okay. That's it for the moment. Thank you very much.
Thank you. Thank you very much, Knut. Thank you for your insight and your presentation. It has become clear that China is not as easy to manage as, for example, Europe or Northern America. For the participants, if you have questions for our expert speakers, please use the Q&A button in the webinar tool, because at the end of the session we will have also a Q&A session with our expert speakers. I think after the presentation of Mr. Krösche, it's now ideal that we have a case study, and it's Chris Tinajero of Ericsson, who manages a global fleet of more than 17,000 vehicles, who is going to explain how he does that also in China. So Chris, if you are ready, we are eager to listen to your story.
I am. Thank you. So we're going to walk through this a little bit, but just a brief aspect here is that my role within the company is actually to look at the entire fleet globally, and we'll talk about what global means. I'm working more on the procurement or sourcing side, working very closely with local operations. So we'll get into that. Ericsson has benefit fleets all over the world. More specifically, we are a very large multinational company in 180 countries. Of those 180 countries, we have, I think I've counted roughly 120, I want to say about 117, 120 of those countries actually have a fleet that we have to manage. We don't manage it centrally. We manage some portions of it. I would say policies and a few other things, brands, and guidance. I like to say we have a GLOCAL approach to how we execute our fleet programs. We'll cover that as well. As Stephen mentioned, we have about 17,000 vehicles globally. It's important to understand the dynamic. 60% of them are service-related. These are technicians or people that are, let's say, cost of sales. The other 30% are roughly benefit, and then, of course, we have vehicles that are used on a project basis, which is, different time periods, not recurring business. We have over 600 suppliers. I like to say we use all the brands, and we use all the financial engagement models, financial leasing, renting, short-term rental, novated leases, all kinds of schemes and that's mostly to do with the local market, which, again, we'll discuss a little bit here. It's not wrong to engage the market. I think one mistake you have in a global role is to say, we will do one brand, we will do one financial model, we will do one policy, and somehow it works across the world. We'll show a little bit our lessons learned in this particular market. So, our fleet strategy, or as I stated earlier, a GLOCAL approach to how we manage our fleet programs. We typically take four basic quadrants. Those that are on the supplier management side, those are on the value creation side. The supplier side is more focused on what we can control externally, and then the things that impact that on the internal. So when we talk about supplier management or managing our suppliers, it's basic, preferred suppliers, making sure you have the right number of suppliers and the right suppliers, how you do funding with those providers, and then, of course, internally, right? Understanding how you manage the spend associated. Great, you put a lease agreement in place. How do you manage the life cycle costs of that? We all like to have business-specific KPIs with the suppliers. We talk about risk and performance and how we manage those suppliers, but that's the supplier components. Then we also have value creation. How do we benchmark? How do we give alternative mobility wherever possible? We want to make sure that every vehicle is not over-specified because the technician has too much vehicle. And then the opposite is true. We can't get to the site. He can't do his job. He's sitting and burning fuel in his vehicle. We have, obviously, corporate responsibility, data analytics, and safety. Safety is very critical within Ericsson. And, of course, the three more common things that wrap all of this together are the strategy, the policy, and how we manage the program overall. This is a global approach to exactly how we would execute, but as you can imagine, we have some local flavors. We don't apply every aspect with a broad brush. We do allow some local deviations. Let's talk about what some of those deviations might be, specifically to China, and let's look at what China is. We've been in China for a very long time. In fact, we currently have only 147 vehicles. And I say only 147 vehicles because relative to the size of the market versus, say, in India, it's substantially small. In India, we have 3,000 vehicles. So having a market as big as China for us is like a sleeping giant. We already know some of the services aspects that we want to deploy. We have a very large operations, just have not yet broken in substantially. So we're heavily monitoring China and what we're doing, but most of our vehicles are still benefit related or company per car. mostly supporting STAs and executives, people who are on long-term assignments or short-term expats. Of the 80 vehicles we have, it's mostly an Audi A6. It's one of the most popular brands that we have in our fleet today. And then from a project or service perspective, it's mostly the Buick GLA. We use roughly 3 brands that we have in the market represent 90% of the fleet, so pretty easy from that perspective. I think we could probably expand a few brands to help diversify or manage the TCO depending on what it is we're trying to capture. 95% of our vehicles are leased, and as we heard from Knut, going into the market, leased is not any different than long-term rental. So I will tell you now that when I talk to the market, they say leased, and when I look at the financial model, it's really long-term rental. To expand on that just a little bit, in a long-term rental company is not necessarily going to provide you a brand new vehicle every time. And most often when you're leasing, doing a true lease, you're doing a brand new vehicle. So what makes the rental companies in China very competitive for us is that they usually have vehicles that are slightly aged or used, and they bring those vehicles on, which makes it a lot more competitive relative to a new fleet. Of course, there's risk associated with that. For us, there's 2 primary suppliers that we use that are long-term rentals, and they're local heroes. They match our footprint within China, but to be quite frank, they're rental companies, and these guys actually self-perform some services that you wouldn't find a westernized company or a European-based company doing, such as maintenance. They have their own on-site maintenance, and they actually have a whole set of drivers that they actually bring to the situation, whereas your traditional European providers is not their core competency. It's not something that they provide. They love to provide the vehicle and maybe consulting and provide, but the aspects of the driver as well as on-site maintenance or self-management and managing a host of used vehicles to give you keeping vehicle uptime is something that's really unique to the rental companies and somewhat is still a value add in the market. That, I think, will change over time as the market kind of goes through its cycle and matures. When we talk about Ericsson China and what we do from a policy perspective, we have some best practices that we've implemented there. We do have a vehicle selector based on TCO and a CO2 focus, basically saying based on cost, we have a vehicle selector, and for corporate responsibility, we do create that list based on CO2 measurement. When we can get that information. A lot of it is not official information from the manufacturer, but more assessing the fuel consumption. Drivers are included for most benefit vehicles, and I think that's a very important fact because for our fleet as it is today, I think eventually as we get to a much larger service fleet, will be a lot of self-driven, but drivers are included in this particular market because most of the people that are getting this benefit are quite senior, and their time is not to be driving a vehicle during driving a vehicle during the traffic environments and trying to be productive. And of course, the other aspect, and probably the more important, is that we usually import a lot of expats, and having them drive in a market where really Mandarin is not exactly an easy language to read for an expat, or I'm sorry, for an outsider. And then, of course, our policy locally has limited employee responsibility. So pretty much we take on the burden of overuse, and I wouldn't necessarily say that's the best practice. That is, let's say, an opportunity. So that's just a quick 3 bullets on our policy to give you an idea of what that is. Getting further into our China fleet and how we apply the framework. We have a lot of opportunities there. We mentioned, Knut's mentioned before about alternative mobility. This is a country that largely was considered had more bicycles and different basic transportations than they've ever had. They've also evolved and taken on new mobility challenges quite easily. Buses, metros, automobiles, they seem to adapt to quite a few of these. We're currently looking at a way to give alternative mobility because one of the challenges we have is traffic management. Traffic can be a nightmare. In cities like Beijing, they have gone to alternating license plates where there are days of the week where a vehicle based on its license plate or plate has to stay, cannot be on the road or not be in the city limits of Beijing. So alternative mobility is almost something we're forced to look at as something, because traffic is so bad it's just not feasible. There are a lot of cost improvements that we can do in that market, but as we were discussing earlier, some of the data is not as easy. The way we approach our fleet and taking cost out is first doing an assessment, and that assessment usually requires a variety of inputs and data from hopefully reputable sources, but we commonly find that there's always two books. There's a gray market. There's those that are official and then those that are let's just say where there's an extra, which isn't as bad as there are in some other emerging markets. Again, we say the opportunity is actually quite good for adaptability to change. That's great. The rental market is a very interesting market. I wouldn't say don't shy away from it. And they're very service-oriented. So we talk about the supplier market, and it would even go so far as to say some even our support organization, very service-oriented, seem to have a good approach to execute on what it is we want. Challenges. We talked about the license plates. I can't emphasize that enough. If I were to say there's one unique thing to someone who is coming into the market who's probably never seen this before, is that plates are essentially auctioned to control the amount of vehicles are on the road, and 20,000 euros is not unreasonable to see from time to time based on a specific type of plate. So it's very, very important to understand that is a pretty big challenge. Traffic management technology is a challenge. It's a little bit inconsistent in what we expect. Pricing transparency is also difficult as you start to dig into what makes up the rental fee, etc. It becomes very difficult to try to get further into that. Not from your traditional leasing providers, but more the rental companies. They will give you just about any numbers you want because in the back it makes sense to them, but they will make it sense. It won't be true and accurate. And of course, the regulatory environment, which we've discussed as well. Things change quite easily, and sometimes in the favor of the local guys as opposed to internationals. And that's in a market that is growing and emerging as fast and rapid as China has. That's not. We shouldn't be surprised by that, and you shouldn't either. From a supplier development perspective, what is it that we look for from the suppliers? Right now, there's so many choices out there. If you just look at the European providers, okay, that's fine. That's manageable. We can engage these guys, start bringing consistency. Then you also have some of the big rental companies. That's okay. A few big rental local heroes is fine. But there's an enormous amount of local heroes. There are an enormous amount of rental companies out there that have come and grown and making a business out of an opportunity, and the barriers to entry are not that easy to overcome when you have a lot of the, let's say, plates tied up in local rental companies. So when you have these many choices in a market, it's very inconsistent to the way the industry moves. Everybody's pulling in a lot of different directions, and not enough people are working in the same direction. So we have a lot of non-standard ways to execute. So consolidation is something that we'd like to see in the market to help us execute or mature the industry. Now, sure, we could get Volkswagen financing to go out and acquire all the small guys, and then they would be number one probably in the world. But that's not practical. We kind of have to wait and monitor and watch. Remarketing. The gray market also brings some uncertainty. And just to be clear, on a closed-end product, that is being priced into, the uncertainty is being priced into it. So the gray market and not bringing some kind of commoditizing what a resale market looks like is also a problem. And of course, what we'd like to see from the supplier market is bring the world to China, right? Bring best practices, bring tools, processes, etc. These are very big asks for lease coast, especially those that are just 3, maybe 5 years in the country, trying to work out both the culture as well as the environment. But these are three big asks that ultimately will accelerate how we do fleet programs in China. So let's talk about a few key takeaways. I tried to keep this on point in bullets. The supplier market is highly competitive, and a good deal is hard to find or explain. I've got a great deal in one hand for 5 vehicles in Hong Kong. I can't get the same deal, even though some of the same parameters are there in Beijing. And so I can't even justify or explain in one environment. You just kind of have to take the market as it comes. Leasing is not prevalent. It's not everywhere. It's not absent. There are still people that have, people typically have an approach of owning something. So even our own employees who rise to level, they want the concept of owning the vehicle at some point. There's a lot more development and transparency. With more development and transparency, we'll open up the market more. We will see a lot more adoption of this. Don't underestimate license plate acquisition as it relates to cost and impact of logistics. There are times when you're waiting on plates and you thought you would have a vehicle. The vehicle's ready, it's sitting there, but we can't get it on the road because we can't source the plates. We can't identify where the plates are, or we can't register the plates. Mobility solutions exist. The challenge, like most markets, from an international perspective, is integrating into your existing policy and managing it. It's great that I give alternative solutions in mobility. It's great that this market isn't a huge problem with that. But the problem is, of course, managing it. And we ourselves haven't figured that out yet. Emerging markets are always susceptible to macroeconomics. China is no different. We see wild swings in both our approach to the market. When China starts to slow down, it seems like we get a lot of pressure within the business internally and externally, and we see that in our supplier markets. We see that as the market starts to slow down, there will be some things that will change or maybe harmonize the way we execute. So we're very aware that things could change. Interest rates could bottom out, for example. The government could play a heavy hand, or the opposite is true. Although there is a local way of working, global practices can and should be implemented. Let me make that statement again. Global practices can and should be implemented. Don't leave China on an island by itself and say that China is really different. I think one of my favorite comments from people when I get into a market is China is different. It is. China is very different, but it's still a vehicle, still has 4 wheels, still needs petrol, still has a driver, oil changes, etc. It's not that different. Bring best practices where you can, but understand the local environment. That is all I have for you guys.
Okay. Chris, thank you. Thank you very much for your insight, for your case study. It's really great to see that also you try, as a global fleet manager and a multinational company, try to harmonize your fleet management in an engaging and exciting country as China. We are now coming to the final stage of this webinar, and that is our Q&A session with both expert speakers. So you can submit your questions through the Q&A box that you see in the webinar tool, and we already received some questions, which is always nice. The first one is a question related, the question for Chris, and the question is related to some of the key elements, to the key takeaways that you mentioned. You talked about maturity of the market in bringing the world to China. Can you be a little bit more specific? What do you mean by that exactly?
So when we engage, so let's talk about leasing companies, because it's really what it was intended to, or those multinational suppliers. Usually when we walk in and talk with local providers, we realize that the market doesn't necessarily work or have technology that has as a view of what it is, what the market is, telematics, and how telematics are integrated into our programs of managing fleets. So when we look at lease codes, we see the best practices. We see a lot of the active full-service leases. We see those aspects that give transparency associated with those leasing companies or fleet management companies that provide active management of their vehicles, i.e. routing vehicles and technicians or people to the most suitable garage as opposed to a garage. In bringing kind of the quality of service and technology across the entire fleet. What we see in the local market is a lot of very local, and when I say local, not at the 23 regions, but at a city environment. When we engage suppliers, there's no connection between, even within one company, two cities and two particular areas or subregions within the market. So when we talk about the use of China, we see some general business practices, especially when it comes to fleet management. It's not just a car and a guy and a bill that you get paid every month. There's other aspects of fleet management that we think needs to be driven by lease codes.
Mm-hmm. Okay, that is clear. A question for Knut Krösche. An interesting one. Knut, there are some international fleet management and car lease suppliers that are already present and active like yourself in China. The question is, would you see some of the Chinese companies that you mentioned also entering the European or the American leasing market in the future?
Yeah, probably. The question is what does mean future? So I don't see that in the next 3 years. Actually, from the OEM side, we have seen them already on the large motor shows that they bring cars to us. Actually, there are already existing 120 own OEMs in China, so domestic car manufacturers. Yeah, that means first they will go into their own market, and probably they will go outside China. Still, thank God, we have, from a European OEM perspective, the more attractive and the better cars. But they are working on it, no doubt. What we see is now that the first insurance companies come over here to Europe, to Germany. I don't see that from a leasing perspective, because actually they are, even in China, they're very small, and I don't see the know-how and the volume that they cope with the huge operational leasing market in Europe. Mm-hmm. But as far as we know, the Chinese, probably just a matter of time. But in this case, it takes longer than they come with normal goods onto our markets.
Okay.
In the near future.
Okay. Another question for you, Knut, and afterwards Chris can also add a comment. It's related to the aspect of alternative mobility, etc. We know that in China there are a lot of mega cities, and so traffic can be a big issue. It can be a market where alternative mobility can be interesting to implement. The question is related to the fact, do you see with Volkswagen Financial Services the mega cities in China also as a sort of, let's say, pilot, sort of a laboratorium for example, services like car sharing, etc., that perhaps afterwards you can launch then also in more mature markets?
Actually, we have a car sharing product there. We call it V-Rent, and that is a model where we have placed in the big business towers in the business areas. We have cars with a quite easy system. It's just you can book them via internet, get a key from a key box, go with the car, because you have to see that in the business areas, if the people work there in the business towers in the evening, if they miss their bus, that's really a problem for them. And you probably also cannot rely on taxi, so they can just go down, take a car, go home, come back in the next morning, or they go for short business trips. But what we recognize in just recently is that the car sharing perspective in the mega cities is during the business time also very difficult because they just don't get forward. In the evening it could work, but for business trips, as I said, usually they take the train and take other mobility means or go by plane. I see there will be different or new forms of mobility. What we currently see is that the taxi hailing, like Ubers and Get and Lyft, this kind of business probably will grow, because car sharing means still you have to drive the own car, or you have to drive the car. That they, especially the expats or also the internal guys, like to be driven by someone. If the telematics goes in, we probably would see self-driving cars, special lines that they get off control of this traffic. There is something to come, but it will be probably different forms than in Europe. So car sharing is there, but it's still difficult. Taxi hailing is a thing that could work, and probably in the future they try something with autonomous driving. But to
okay. Chris, you also mentioned mobility. Can you elaborate on that? What kind of alternative mobility solutions are you already using, with what effect?
To some extent, we're looking at your Uber, your DG, or the sharing programs, not necessarily the OEM-driven, or more specifically those that are managed like a pool vehicle within Ericsson. We're starting to look at some of the newer, more, let's say, acceptable environments for people who need transport from point A to point B. It's kind of a hybrid between your taxi environment and car sharing. So we're starting to play with that environment. In fact, we're heavily involved in reviewing what that might look like. Within city limits, we have an allowance for mobility budgets for, say, bicycle renting, things like that. But that's a very small portion of our fleet that is doing that.
Mm-hmm. Okay. You, for the moment, have around 150 vehicles in your fleet in China. You also indicated that there are, let's say, mostly benefit cars and cars related to specific projects, but that for the moment they are not yet really technical fleet cars. Why is the first question, and when do you consider to start with also cars for your technicians?
That's a wonderful. We're primarily, our core business when we enter a market is around products. We actually sell a box, to put it quite simply. The service aspects usually come later. Beyond that, in the life cycle of our market in China, we expect to grow our service businesses substantially, and that's not just me kind of saying that it's not anything that I'm releasing. That's typically how we would enter into a market. So the services business usually follows quite readily behind it, and as it starts to mature. When you look at the vehicle counts associated with this market, it could be much bigger. It could be one of our largest markets for vehicles. So we're very conscious and very aware of China and ultimately what it could do, but the vehicle counts for us could surpass 1,000.
Mm-hmm. Okay.
But we're not there yet.
Okay. Mr. Krösche, a question for you. you talked about the fact that there is operational lease, long-term renting. You can compare it really to what we are used to, let's say, in Europe, for example, in terms of the products offered. Does that mean that even though that we have seen, for example, that there are some gray zones in terms of remarketing, etc., you are offering full-service leasing, operational lease, including residual value risk on your books?
Yeah, exactly. So actually, I did not say that this is a complete different product. Actually, around the services, it's really comparable. It's the same that you know from Europe. They want to have all the services around the car, including maintenance and all the things. And actually, yeah, we do an operational leasing with residual value on our books. It's really like you know it from Europe.
Okay. Chris, in one of the takeaways, you say that although there is a local way of working, global practices can and should be implemented. The question is related to that takeaway and also the fact that you mentioned that you worked with two primary suppliers who are local heroes. So why don't you work, for example, with international suppliers with that regard?
Okay, so let's take the first part, which is there's a global practices that we can implement. So when we look at a vehicle, usually we look at it from the same eyes. It is a vehicle fit for purpose or a vehicle an approach. We have a policy associated with how we engage CO2, how we engage what's offered to the employee, if they get visibility to a budget versus they get visibility to a vehicle. So we talk about some of the basic programs and taking a kind of a policy approach, saying we're not going to give money to the individual. We're going to say, here's a vehicle because you're at this level, and that's the right approach. So, and then what's included in that can be first harmonized at a global level and what should be included in what is unique at a local level, such as a driver. The reason why we don't use international providers versus local providers is the level of service. Most of the international providers are just breaking in and ramping up their businesses. They bring best practices, but they themselves in the market didn't transport all their European fleet managers who know everything about fleet management, no matter where you put them in the world, and suddenly drop them in China. They basically hired local people, trained them up, started signing on people, and are kind of bringing the world to China to some extent, or trying to. What's unique about China for those westernized providers or multinationals coming into China trying to compete with the local heroes is all the things we stated before, the plate environment, the regulation situation, that not being a local hero, they have some challenges on themselves. One thing that we kind of, to what you just asked, is that the funding environment is very critical. When you go with a lease, a traditional lease, operational, financial, it doesn't really matter. The majority of the cost associated with that is the difference between the purchase price and the forecasted future value. So if you're a multinational and you have no idea what the used car market will look like, you're going to set a relatively conservative asset or value for that vehicle, meaning that the gap between the purchase price and what you think the vehicle will be worth will be significant. Whereas a local hero who doesn't plan to get rid of that vehicle, let's say a rental company, doesn't plan to get rid of that vehicle anytime soon, will continue to use that vehicle until, to use an expression, until the wheels fall off. They have an expected life expectancy long after their first user is done with it. They will continue to reuse that vehicle. So their cost model can be a lot more competitive than a Western provider. And because they are local and the regulation favors them, it can almost be easier to work with a local hero.
Okay. Mr. Krösche, what is your comment on the explanation that Chris has just given?
Yeah, he's right to some extent. It was at the beginning, of course, difficult for us to have the right residual value estimation. But our philosophy is if we do operational leasing, residual value risk is with us. It's managed by us. We get some experience now. We have some experience. We analyze the used car market. and more or less it's the same bet onto the future like in Europe, but it was at the beginning really difficult, and of course we had some obstacles to overcome. Now we are quite good at that, and we're in line. The other thing is the high cost of getting the plates. I said you can only grow with either an auction, then you don't pay for it, but if you grow by buying small rental companies, they know how high the value of this plate is, and this is the bigger cost that you cannot just put through. And in addition to that, what Chris also mentioned is the legislation aspect. Usually there are plates for business and plates for private reason. If you're a local supplier, they always find a way in between, using probably plates for another aspect that is something we cannot do for compliance reason. We're controlled and things like that. So it's really often a little more difficult for us because we don't have the gray zone. But from a residual value perspective, we're quite good on the road. The other thing is the plate cost.
Okay. Almost the final question, Knut. A very concrete one. Are you or do you have the same, let's say, IT tool reporting system in China than you have also on an international level, or is it specifically developed for China due to the specific elements of the Chinese market, let's say?
No, it's adapted, and I also would agree with Chris. To lease a car, to lease a car, to lease a car. The fleet business is probably one of the business that is quite harmonized worldwide. That's, we say, 80-20 approach. So now we have brought systems from global system suppliers to China, adapted them, but we didn't develop a complete own thing. We have adapted Chinese specificities, but you can use a European full-service leasing system. You have to adapt it to Chinese regulations and some accounting things, but it's not that you have to develop your own thing completely just to do business there.
Okay. Then a question for Chris. You also mentioned in your presentation that you use sometimes young used cars, let's say, and that this can be also a competitive advantage in terms of cost for you. How old are those cars, and how do you still, let's say, control the fact that they are safe, that they are really well for your drivers, etc., etc.? How do you manage them?
So that's something that bothers me in general. Is that as a company we try not to. We have a duty of care for our employees. So using used vehicles usually is not an approach that we have in most markets, especially, let's say, more mature markets. So I would tell you that used or secondhand vehicles or used vehicles is not a European approach, or anywhere else in the market we have a substantial fleet. But those emerging markets where this is a very common practice, especially where new vehicles and plates associated with acquiring them is very difficult to obtain, we typically allow or support the local environment of using used vehicles. And usually we have a demand of no more than 2 years old and a certain mileage before we ever engage allow a fleet to be utilized in our environment.
Okay. Final question for both of you. Brief answer. If I am an international fleet manager getting responsibility over a larger fleet in China, and I need to take a first step, let's say, into how to integrate my Chinese fleet into my international fleet management, what is your number one tip for me so that I work efficiently? Perhaps Chris to start.
Yeah, so the most important thing is listen. Come into the market and understand that things are ultimately a little different, but don't ignore the fact that you already have an idea or practice. Don't force it down the local organization. Come in and try to work with what your objectives are. If you're trying to make sense of it in day one and want complete transparency, that's a little bit fool's gold.
Okay. Knut, Mr. Krösche, what would be your number one tip without directly selling your company?
If you go there, transparency is really key. See, there is a market that's very fragmented, and get a feeling for it. if you're kind of looking for adventure, you can do your own thing, your own journey. Do it with local guys. They are good. They can do so, but you have to react on the Chinese behavior. And of course, if you want to have something that you know, go with the ones you know from Europe. They can serve you. You can trust them. They know now what they talk about. So first go and try to understand the market.
Okay. Thank you very much. We have come to the end of this really interesting and engaging webinar on efficiency in fleet management in China. I would like to thank all the participants in this webinar, but for sure also our expert, Chris Tinajero of Ericsson and Knut Krösche of Volkswagen Financial Services. There is also a recorded version of this webinar that we will put online in the upcoming days on our website, globalfleet.com. So our website also gives you interesting information and expertise about China and other Asian markets, so please visit our website, and if you want to, you can review the recorded version of this webinar. If you want to contact our expert speakers, you can. You find here their names and their email addresses, so they are open to share with you further expertise. And then finally, I would like to say that we are preparing with Global Fleet also a fleet management guide on Asia with different markets that we will look into. China is one of them, but there are other ones in the Asian region that we want to cover, and that guide will be available from the end of June, the beginning of July. Thank you very much. I hope that it was interesting for you, and we would like to meet you again in an upcoming Global Fleet initiative. Thank you. Bye-bye.